Hey, what's up, everyone? Welcome to another episode of Swing Trades. I'm your host, D-Rock. Thanks for tuning in today. And if you like the content, show some support, please, and click that subscribe button. So, without further ado, let's get to it.
All right, this video I'll be doing a retake on my swing strategy just to get a little bit more detailed and clear up a few things. Um, in other housekeeping, I appreciate your patience with me too as I really continue to learn the ropes of creating YouTube content. Um, I'm learning a lot already just after a few videos. So, any rate, let's get to it. This strategy, along with the matching indicator, is published on TradingView, and I'll drop the link below here in case anybody wants to give it a shot. But I wanted to explain this strategy because I will be creating regular content revolving around this strategy and probably doing some paper trading journaling as well, just to sort of keep track of things and show you guys the progress. Um, so the overview here of this is a very basic strategy of combining basically, three main categories that I believe are, sort of the main categories that anybody should really look at in terms of swing trading for sure. And that's going to be, you have volume, you have trend, and you have momentum. Those are the three biggest things that the momentum swing traders at least really look for. Now, if you're a long-term investor and you're maybe trying to swing something for a year or 2 years, you probably really don't care so much about momentum. It's not really a factor. But if you're looking to swing trade something within a relatively short term, say a few days or even a few hours for sure, then momentum is something that you want to actually pay attention to, because especially if you're doing options, because that can drastically affect the performance of your trade. So this strategy here is a moving average crossover strategy, and it's very generically called a moving average because it offers so much customization that you can use simple moving averages, exponential, weighted, or a combination of them. I'm going to show you what I use for my strategy and what I focus on. It's very particular, but this this strategy within TradingView and the indicator as well has so many options for you to customize, along with visuals too. You'll notice that the visual I have on this map is I've already I've adjusted it to fit more my needs on my custom, and you'll see that when we get into the charts here. But uh, any rate, fully customizable. Well, and I'm always looking to add new features, new options in it, new calculations, things like that. So I'll be trying to update this periodically. If there's any feedback related to it as well, please don't hesitate to drop that. And the strategy here is using the way that I use it. I use it for EMA crossover, and I use a very basic 5-day and 10-day EMA on the daily chart, crossing over. So the 5 needs to be crossing. You see the yellow here? That's the 5 crossing over the pink, which is the 10-day. Right now, if I were to just do that, you see here, even on this particular ticker, it's crossing it can't figure it out, and so you're getting a lot of false signals here. So what I've done additionally to try to get that momentum factor into it is that I've also uh, coded in the ability to turn on and off the MACD crossing as well at the same time. So with this strategy, it says, okay, we're looking for the EMA cross, and then we're also going to look for the MACD to cross at the same time. If those two don't happen at the same time, then we're not going to take the trade. If they do, Then I also have another third piece of criteria. And again, this is optional as well, but I put in there the stock also needs to close above its 50-day EMA, which in this chart is going to be the bottom portion of this blue area. Now, the reason why I do that is because I would like to just see, in more of a midterm time frame, is this stock in a potential bullish pattern, or at least is it working on becoming that way? It might still be under its 200 or 500 day, and and those are things I pay attention to on the fly on a per trade basis. But in terms of coding the strategy, I want to just say, look, if it's above the 50-day EMA and these other two pieces of criteria match, let's take that trade. So that's kind of the overall idea around the entry signal. Okay, so what you'll see here is on this one, we actually have a risk management section as well built into this strategy. And that's to kind of give you an idea of hypothetically what could this ticker or what has this ticker done in the past on this strategy. And that's just trading, common shares of stock, of course. TradingView does not allow for options back testing. So me personally, I actually use this for options. I do anything from basic call and put buying, to advanced option spreads. And I use this to help me determine, for the underlying, where are my stop prices, where are my profit targets, and then I'll get an option strategy based on those targets and based on the time frame that I think this trade should be. I should be in this trade, right? And so that is one really good thing that I like about this for me, because I was able to play around. You play around with these numbers and adjust your stop loss multiplier, adjust your profit target multiplier to something that fits you, to what you like, and that way you can kind of get an idea of if this strategy could work for you. And again, you can do any number of moving averages crossing over, a 5-day EMA and the 200-day SMA if you wanted to. That would be crazy, but you could do it, right? And the options are here for it. And, I actually go through and explain the formulas and all that stuff here too. And then your confirmation options, again, I'm looking at trend, volume, and momentum, right? So with the volume, I'm not going to be able to get that in TradingView, or at least I haven't coded that into this strategy. That's just something you've got to look at as for each trade on a per trade basis. But I am looking at trend. The strategy does capture trend and momentum with the MACD there. And the MACD is again, it's not necessary to have it on your chart, but it can help for the visualization aspects of it. Early exit criteria. So here's another one that I didn't see in any other trading strategy. It was basically, look, here's your targets, and we're going to wait for this target to hit. We're going to wait for one of these targets to hit. Well, the problem that I found with that is that oftentimes, especially when you're trying to do a momentum trade, you don't want to be in this trade for too long, as the momentum can die out. It can fizzle out fairly quickly. And so what I found was that if I left my equity in a trade and I just waited for the profit target or the stop loss to hit, it could lead up to months and months of that occurring with a lot of sideways action. Well, that doesn't help my option contracts. And furthermore, even if I were to play equities, basic stock shares, that's I could probably have my equity tied up in better places in a different trade. So what I do is I have a time limit set in here that is also optional, and I personally use 8 days or 8 bars. And what that's saying is that when it enters the trade, I give it 8 full bars to work itself out and try to find one of those two targets, preferably the profit target, of course. And if after the 8 bars, if it has not reached one of those targets, then on the very morning of the ninth bar, it gets out. It just exits the trade. Now, oftentimes when that's kind of how the trading view strategy works. Now when I'm actually trading, I will typically use the end of day on the eighth day. Um, it just kind of depends on when it falls, honestly. But end of day on the eighth day or the beginning of the ninth day. And that's just again, that's just getting out to be able to use my equity in other places. Also, there's another um, there's another early exit criteria here where I simply say, look, if the moving average cross that got you in to the trade is also now crossing underneath for essentially the opposite version of it, then get out of the trade early. So if I'm using the 5 day and the 10-day EMA and the 5 has crossed up and I enter the trade, well, if after a couple of days that 5 then crosses down underneath the 10-day, that signals to me that this trade isn't ready. This momentum has died. The trend is failing. And I just want to get out now. Get out now while I can instead of letting that capital burn even more. And so I have that option in there as well. And then there's some visual aspects. So that's kind of just going over the trade strategy itself within TradingView. We'll go over here and we'll start looking at this. So looking at SPY on the daily, let me just show you what we're looking at here. On my particular one, I have a mix of the indicator and the strategy, and that is simply because we are live in the markets right now, and the strategy, if I were to turn on these clouds, you can see here how today's candle, this cloud isn't touching today's candle. And that's because TradingView, for the strategies, it's always in the past, in the history. So the cloud will not be over this candle until about I think it's 8 p.m. Eastern time. So I don't use the strategy for visuals. I use the strategy just to show me, just to show me the data, and then I use the indicator for the actual live visuals. So that way it kind of, I can see it unfold as the day is happening here. So we are live here today. This is April 14th of 2025. This is the live chart here. And looking at SPY on the daily time frame, and again, I wanted to show you, let's look at here. I've got the 5-day and the 10-day EMA, and those are my signal choices, the fast and the medium. So these are my signal choices that I'm using for the crossover. And based on that, SPY in the history of SPY, let's look here. When was the first one actually? 1993 was the first trade that got triggered. So we're looking back a few years here, and it does only have 56 trades over the course of a long period of time. And a lot of people will say, hey, you need at least 100 trades to be able to really justify a strategy, and that can be true, but I have found for this particular strategy that this is plenty. This is good. This really gives me a broad sense of what this strategy does and how it performs. Yes, it can change. Yes, um, it can have failing trades, just like any strategy does. You can see here, this one was a loss, this one was a loss. Small losses, right? Small losses with bigger returns. It's basically just in an upward trend in terms of performance here on this one. And with SPY in particular, you'll notice something else here is that the past few trades, at least, let's see, the past four, the past five trades here, the exit actually occurred uh, due to the time limit. So after the eighth bar, on the morning of the ninth, and that is something that some tickers react that way. Some tickers react um, with a little bit differently, and uh, most of their targets are get hit. It kind of just depends really. It's a trade by trade, ticker by ticker kind of view here. But with SPY, looking at this, I've got 56 total trades. I've got a profit factor of 2.523, and again, that's using the hypothetical risk management properties that I showed earlier. And over the course of the 56 trades, it has made 11 grand. I don't pay attention to the numbers so much in terms of the dollar amounts because, again, I'm not trading this with equities or with common shares. I am converting this to options. So, for example, when this one hit right here, looks like we entered right about 600. Um, that profit target was 624.47, which was pretty high up there, and the stop loss was 590. So I think in this particular one, I just got into an option spread, a vertical bull call spread. I forgot exactly what the strikes were, but I did end up getting out at the long at the max bars here, and I got into the spread just so that I could withstand one of these gap downs here. So you can see here, got in, it looked great for a couple of days, and then we gapped down, and then it came back up, and actually right back up here when we double topped is when I got out. But because I was in a vertical spread, I was able to manage the risk a lot more instead of having that contract go to zero. And I bought, I think I bought a couple of weeks worth of time on that particular trade there. So and you can see here, this is what I mean by that momentum kind of dying out. We got into the trade here. It's working. It's working. It's working. And here is actually the long max bars exit. So we say, okay, you know what? You've had 8 trading days to figure it out. You can't figure it out. We're gonna get out. We're gonna get out. And you can see here, it actually kind of did fizzle away, and then we then drop back down before going back up. Which, when you're playing options, this kind of pullback can really hurt you unless you're playing some extremely long term, deep in the money kind of strategies here. And again, just showing this one here, came up another max bars exit there. And then it also does show when there's a cross exit. So on this one here, we got in. The very next day, it looks like it got out as it ended up being kind of a false signal, and that happens sometimes. But everything showed up correctly. You got the MACD crossing, got the EMA crossing. It's time to get in. If you were to look at the charts from this candle on where the signal was, it looked like a good chart. And I don't know what happened here. Probably just had some news. I don't recall at this time. But that's kind of the basic sense of the strategy. And you will see with it when I actually do this strategy, when I'm going through the videos here, I will plot out my entry, my stop loss, and my profit target. And these three are actually three of them that I did on a video, kind of the first three that I'm starting with this YouTube channel here. And I have these ones plotted out, and I actually have these positions on right now, and I will recap those later on when the time is right, when we get to our time or when the trade hit a target. So that's what you'll see from me. I will show you the entries, and these are based on the calculations that I've shown you. And when I do look at them, I do have, for example, this is today's scan. Now these haven't, the day hasn't closed, so we haven't confirmed these yet. So I will wait until we do. But when I'm looking at these, I will also look at the performance of it. Not all tickers do well. And that's just the nature of strategies. I will go through these potentially on a daily basis, but at least once a week for sure. And uh, I'll show you what I'm looking at. I'm going to go through. I'm just going to grab all of the tickers that get pulled up on my scanner, and it's just a matter of going through them and looking to see if they are actually a good trade setup. So that's the other part of the criteria is just because TradingView says, hey, here's a signal, here's a little arrow, doesn't mean I'm just going to blindly buy it. I'm going to look at it as a human and see, okay, does this chart make sense? Is there a theme here? Is there some fundamentals behind it? Is there good performance track record on this strategy? Because if there's not good track record on a strategy, if it's losing more than it's winning, uh, after a really solid amount of trades, then I'm gonna just say no, thank you, and I'm gonna move on. I'm gonna move on to a better one, to a better opportunity. So that's just kind of how that works. Trying to journal these for you guys, and let me show you that. We will switch on over to Excel here, and in Excel, I have this journal here, and we'll just kind of hypothetically do one. We'll look at the daily, and we'll do this top line here, XLP. Just kind of giving you an example of what it would look like. And so with XLP, current price is 81.76 hypothetically if I were to get in right now, and the ATR is $1.74, and I saw that right down here. I have the ATR on here for that exact reason, just so I can see that. And this is going to be a long trade. So this is telling me right now that I'm going to get in at, I'm going to get in here at 81.76. And then my stop loss is going to be 79.32. Okay. And my profit target is going to be 87.33. All right, and now let me switch back. I forgot to switch back here, sorry. Let's get back here. Okay, so you can see I have my profit target in here, or my stop loss, and my profit target is actually way up here. So we might be adjusting that. Let's see here, target. Yeah, so we might be adjusting that, especially with options. I don't need to drag it out that far there. And we've got some pretty big headwind here with the all-time high. So this is definitely an example of when I would take this profit target. I would say, you know what, I'm going to be okay with potentially even 83, this 83.32 area. But I'll probably use this as a first target, and I'll put my second target. I'll find some supply right in this area, probably on a lower time frame, and I would probably do something more like this. Now, at the same time, since I'm reducing my profit target there, I'm also gonna say, you know what, we're gonna say right below today's low of day, which would also coincide with the 200-day, the 100-day, and the 50-day EMA. Looks like we have a lot of moving averages sitting right here Luckily, it's on the top side of them, but this is going to act as really good support. So I'll probably put my stop loss just below those, because if we break through those, there's a good chance that we're going to keep breaking through. And you can see here, there's a good volume shelf right here too, um, which I believe is where the original stop loss was. But this is just an example of how I would move those. There are examples. LHX was one we did on the weekly. And these are the actual calculated levels. 204.89, here was the entry. And here was the actual profit target based on the ATR. And it put it right at the very beginning of daily supply, which is exactly where I would want to put it for an ultimate target. Now, this is a longer swing. This one here is going to be about 7 to 8 weeks max. If we hit that profit target tomorrow, of course, then that's all I need. But max, I'm gonna give it up until about the middle of June. So sometimes these targets work out perfectly. Other times, it's just a matter of adjusting, and you'll see that as I go through these trades on a consistent basis. You'll see me mark these, and hopefully we can make something good here, and I can help some people learn and help myself as well. Right? That's always the goal. We're all trying to get better here, and so I appreciate you joining me on this journey, and appreciate you watching this video. Let me know in the comments if you have any feedback for me, and I appreciate it. Thanks, guys.
Hey guys, thanks for watching. If you found any value in this content, I would find a ton of value with a show of support by clicking all the buttons. You know the ones. If you didn't find value and you can spare a few seconds, please drop a comment. Let me know. Feedback is the best way I can improve. Thanks, guys, and be safe out there.